An early look though at what we can expect from our local market. Stan Shamu from IG in Melbourne joins us now. Stan, good morning to you. There seemed to be a real lack of correlation, I suppose, in the risk space overnight. What was behind that, do you think?
Yeah, no, absolutely. With the current uncertainty just surrounding global markets at the moment, I think those correlations, particularly in the risk space, are starting to break down. Of course, we've got equities on the one hand in a monster rally and in a monster uptrend, which has been in place for the past few months. And we've got investors who are more than happy to keep buying the dips and look at markets with a glass half full approach when it comes to equities. Of course, most equities are charging towards record highs or multi-year highs. And this has really been a theme for the past few weeks. And with that in mind, we would have expected the rest of the risk space to be showing signs of similar strength, but it hasn't really been the case. If you actually look at some of the risk currencies like the Aussie dollar and the yen and the euro, they remain under pressure. Just overnight, we did see them extend those losses. Of course, we had the Aussie dollar having traded as high as 1.029 following those capex numbers, but it's reversed sharply. It's down to around that 1021 level. On the other hand, we've got the euro, which was trading above 131 against the greenback, and now it's heading back towards that 130 level. So it really does show that the strength we're seeing in equities isn't translating anywhere else, really. I think the main reason behind this is just the US dollar and how it's being repriced on a daily basis following US data or comments by a US Fed member or the US Fed chairman, Ben Bernanke himself. At the moment, we've got a US economy which is showing signs of improvement, and we've got Fed members who are looking to tie up the asset purchase program to some of the improving data we're seeing, so adjusting it as we go. Whereas Ben Bernanke is saying, on the other hand, we won't see an abrupt end to QE until we see a sustained recovery in most of the matrix, particularly the jobs market. So this has seen the US dollar quite choppy over the past few days. At the moment, we are seeing strength in the US dollar, of course, supported by some pretty good economic data, particularly with unemployment claims dropping, and as well the GDP numbers showing that the US economy actually expanded at the end of 2012. We also had Chicago PMI numbers, which came in quite strong. But this hasn't been enough to really translate to the Asian session at the moment, and it seems we're following the lead of the risk currencies, which are pointing lower at the moment. Of course, we will have some key economic data through Asian trade, particularly with China releasing its manufacturing PMI, and we also have that HSBC flash manufacturing PMI reading to look out for. So it's definitely going to be an eventful session in Asia, and this will be quite interesting as well, considering sequester is set to hit markets later today when the US comes back online. Of course, in typical fashion, the US leaders have organized a last-ditch meeting to come up with something to prevent these automatic spending cuts. But I think optimism is relatively low, but this hasn't prevented investors from bidding up equities, which have been trending quite nicely over the past few weeks.
Stan, we've seen the Dow Jones Industrial Average and the S&P 500 close weaker after really trending higher for most of that session. What was behind that late sell-off, do you think?
Yeah, I think it's just a bit of skepticism with this sequester issue. I think it warrants some caution, particularly with markets approaching these sort of levels. I think some investors will think maybe this will turn into resistance and it'll be maybe a source of a near-term correction. So it's better sometimes to just exercise caution as opposed to just remaining exposed to some winning trades without locking some sort of gains in. That's probably one of the main drivers of that. And I think to an extent some investors were just hoping that we'll get an announcement at some stage throughout US trade in which US leaders will sort of say something positive or alluding to a short-term agreement being knocked up and preventing sequester from kicking in.
All right, so given that lead, do you expect our market then to follow the lead of the risk currencies and now the US and open significantly weaker?
Yeah, maybe not significantly weaker, but probably down around that 0.4% mark to around 50, maybe 8.2, I think. Of course, yesterday we closed above 5,100, which was quite an impressive feat. We haven't really closed above that level since August 2008, so that was quite impressive for the local market to manage to head towards those highs. Now for the month, I mean, coincidentally it was the end of the month as well, so for the month we finished up around 4.6% for February, so that was quite a good little gain there for investors. But it doesn't seem like we'll get off to a positive start in March. Of course, today we've got the commodities struggling in line with the risk currencies. We're actually looking at BHP's ADR pointing to a 0.9% drop. So that's below $37 now. So that will be one of the key stocks to look out for as usual. We've got gold stocks likely to pull back as well. Gold's been hit because of the US dollar starting to gain some ground on the back of that better than expected US economic data. So the resource space is likely to get off to a slow start. We might get some support from some of the yield plays, the more defensive names, as we've become accustomed to now, particularly with the banks and the likes of Telstra and some of the consumer staples like Woolworths and Wesfarmers continuing to hold up fairly well. Of course, reporting seasons also come to an end, so that limits the leads from that end. But of course, we will find some sort of stocks continuing to post earnings post the official expiry of reporting season. These generally tend to go into trading halts, and until they release their results, then they won't be able to trade. So that's one thing to look out for some traders out there. We also have a lot of ex-divs set to hit the wires as we progress trade throughout next week. So that might be an influence on how the market performs as well. And of course, analyst changes to stock ratings as well. That will be something to look out for. So yeah, no, it seems like we're starting the last day of the week off on a low, but with investors quite focused on buying those dips in equities, we wouldn't be surprised to see us trade flat at some stage until we get those China PMI numbers. Then there might be the game changer for the Asian session today.
Okay, Stan Shamu from IG, thanks for the update there. Well, the founding family of Westfield Group has sold its entire 7.1